Welcome to Real Estate in Real Time. I'm Woody Zimmerman here with Mark Skabowski of Remax Lakes. Welcome to the show.
Good morning. How are you?
Doing well, doing well. I know today you wanted to talk about some creative financing.
Creative financing, and why? Why are we trying to be creative? Well, it's mortgage rates.
Yeah.
They're still up there. I mean, they've improved here recently.
Mm-hmm.
I get those weekly updates from every lender under the sun. I've signed up for those notifications.
Yeah.
We're seeing 6 5/8, 6 3/4, still some at 7. Again, all those are your specific financial position.
Right.
They're specific to you.
Yeah.
But those are in the ballpark, the rates.
I'm sure you hear about it every day. Mark, when are rates going to drop?
When are they going to drop?
Yeah,
when are they going to drop? So, I went out and I grabbed some stats from Fannie Mae, from the Mortgage Brokers Association, Wells Fargo, an average of those. So our rate's going to go down. They're predicting, again, it sounds just like last year, between 6.5% and 7% for the year.
Which, I mean, that's what you've been saying for...
They're going to fix there.
Yeah, that's what you've been saying for like a good year. Yeah.
Unless something strange happens, we're going to be in that 6.5 to 7. Now, the rates progressively decrease through the year, at least that's the prediction, to where in the fourth quarter of 25, we're expecting the average for those three entities is around 6.5%.
Okay.
The average in the quarter two, which we're finishing up, first quarter now, getting into the second quarter is 6.8. Well, the difference in somebody getting a mortgage between 6 3/4 and 6.5, can it be significant in total cost over the entire 30-year mortgage? Yes, it is significant.
Okay.
But in the grand scheme of things, if you need to move now, waiting on 6.5% interest, paying rent from now till fourth quarter probably doesn't make sense financially.
Yeah.
If you look at what's it cost you for rent every single month, which is just like you're burning money, versus the change, how many years is it going to take you to recover that with 0.25% in interest? You've got to do that math. Yeah. Unfortunately, math, which math is not my strong suit. Well, I think it's progressed to where I'm stronger at it than I was. Yeah. Basic math I'm good at. Algebra I was good at. You get into calculus, not so good. That's why I was a business major.
Right.
Right? I did not become an engineer because calculus was not my thing.
I'm with you.
But financial math, I'm on it.
Oh, yeah.
And you need to do that math for yourself. But if you're still on the fence, should I buy, not buy, I want to wait till rates drop, doesn't make sense to wait till rates drop financially from my perspective. There are other alternatives you can have. So, if you're out looking and you decide you want to buy a house, I'm seeing it more and more on purchase agreements. Buyers are asking sellers to pay some of their closing costs and mortgage buydowns. We're seeing larger percentages to where typically the cost of financing a loan, if you Google it, it's going to tell you it's 1% of the value of the property. So that means if it's a $600,000 house, it's $6,000 for closing costs. Okay. In our area, typically, I calculate closing costs around 4 to 5. Okay. Whether it's $100,000, whether it's a $600,000, that number in closing costs is in that ballpark. Of course, you want to talk to a lender to get specific for you, but average $4,000 to $5,000 for closing costs. We're seeing buyers asking for $10,000. Why are they asking for $10,000? Because they're buying the interest rate down. I closed on one the other day. They're called points. You prepay interest. If you prepay those interests, it's 1% of the loan value is typically 1/8 of a percentage point in the interest rate. Okay. So 0.125 is the reduction in the rate for 1% of the mortgage value, the loan value. So buyers are asking sellers to pay that. If they don't, if the seller's unwilling to, nothing says you can't pay it down yourself. Pay that 1% of the loan value. So if you're borrowing $100,000, it's an additional $1,000. You're basically prepaying that interest to get a lower interest rate over the term of the loan. Okay. And points are confusing.
Yeah.
but that's what they are. So if you paid $2,000, you can get a 0.25% buy down on that. Now, how many $100,000 loans are the average price is higher? That's for ease of calculation in my head.
Right.
So, but the reality is that is an option. Ask the seller to do it. If they can't or will not or not willing to, that's something you could do yourself. There are some other options on the creative financing side, adjustable rate mortgages.
Yep.
I haven't seen them take off like they did in the early 2000s, but they're still out there as an option. And what is that? An adjustable rate mortgage, you get a lower rate today for a fixed term, sometimes 5 years, sometimes 1 year, sometimes 7 years. You get a lower rate today that goes up at 5 years, 7 years, whatever, when it renews to a higher rate at that time, or to the rate at the market rate at that time.
So I use this as a first-time home buyer because I honestly I couldn't afford to buy a home, but this is the creative financing that we used when we bought our first house, and it made it affordable for me.
It made it affordable for you. I am really surprised we haven't seen more of
Right,
those out there in today's market.
Yeah.
But after the break, we can talk about some other things lenders are doing to help people in lieu of those adjustable rates, some other creative financing types.
Very good. You're listening to Real Estate in Real Time. Welcome back. You're listening to Real Estate in Real Time. I'm Woody Zimmerman here with Mark Skabowski of Remax Lakes, and we're talking about creative financing. We've gone over a couple mortgage buy downs, but then also adjustable rate mortgages.
Yeah, so adjustable rate mortgages in the early 2000s, and I did the same thing. When we moved here to Warsaw, we did a 723. It was fixed for 7 years, and then it adjusted at a specific rate for market rates at that time. If the rate had been lower, we'd have kept the rate.
Yeah.
But rates continued to go up over time. You know, we just watched that and we refied prior to the end of that 7 years because rates had dropped.
Yeah.
So instead of sticking with that, we refied.
Yeah.
And, you know, the rest is history, you know, over time. So I'm really surprised that over the last couple of years with rates where they are, we haven't seen a larger push for that from lenders. Maybe the fees are crazy. Maybe there's other things in the background that I don't know about. But what I can tell you is lenders realize there aren't as many people out buying. How do they generate income off of mortgages? Is selling mortgages. They're adjusting and adapting to some creative pieces. There are lenders that are offering, hey, we'll give you a 1% rate reduction for a specific period of time. And what they're hoping for, they're playing the market as well. Sell a mortgage today, give somebody 1% off, and then maybe rates will drop and they'll adjust. You know, that they'll continue to make money because they've sold the mortgage and they've moved on to something different.
Yeah.
So lenders are offering some creative pieces, maybe a 1% for X number of years. Many are offering incentives. We'll pay $1,000, $2,000 towards your closing costs. Lenders have got programs that because what do they want to do? They want to sell mortgages.
Yeah.
Right? I mean, the market is adjusting to the current conditions.
Yeah.
So lenders are doing that. Builders are doing that. Builders are doing that on the creative financing side. And that leads to, you know, many times we don't even think about new builds when it comes to, you know, as an agent, somebody comes to me and says they want to buy a house. Typically somebody wants to move in the next 30 to 60 days. You can't build a house in 30 to 60 days. So unless it's a spec house, meaning speculative, the builder has built it and they will come. Yeah. Right? There are, you know, it's a longer time frame for somebody to buy a new house. Yeah. Now, I had some friends of mine here. They were moving down to Indy to get closer to family. Sure. They walked in the door. We sold their house here. They walked in the door, and the builder, he called me. He said, Mark, can you believe this? They're offering me 3% for a year, 4% for the second year, 5% for the third year. What's the catch? I don't know, but that's a heck of a deal. You know, because if it were me and I'm at 3% this year, I'm paying ahead on the principal, so that by the time I get to the end of that, I refi,
Mhm.
and I've reduced the principal amount.
Right.
But now that's in the indie market, but there are builders up here that are offering some incentives as well.
I've heard about some huge incentives.
There's some huge incentives. Now, if they've built the house, you've limited your customization options.
Yeah.
But if your time frame is longer and you can wait on having, you know what? If they're offering an incentive, it may take you 6 months to get that house. And most of us aren't thinking that far ahead, to where on a house, okay, I can wait 6 months. I can afford to buy one today without having my house sold.
Mhm.
Typically, people need to have their house sold in order to purchase. But there are builders that are putting new builds up. Maybe you can't customize it as much, but there are some tremendous incentives being offered with these builders.
Mhm.
So, there's positives and negatives in new builds. The positive is it's a new house. You got a new furnace, you got a new roof.
Yeah.
You've got all these things. The negatives that I hate to say they're negatives, but the challenges you're faced with, there's, no blinds. You've got to put blinds in. My joke about the yards, most of the time builders, they might put sod in the front, but the back
Yeah.
is chicken scratch.
Yeah,
They throw
yeah,
enough
right.
seed out there
Yeah.
to meet the requirements to have a lawn put in.
Right.
And it's work to get a good lawn.
Mhm.
If you want to have a good lawn, there's work in order to do that.
Yeah,
So, there's these incentives that these builders are offering. People need to not discount those, to think about that. But again, you need to just understand it may be a longer time frame. And, you may have to put some effort into that house once you get into it.
Mhm.
But, long term, they're more energy efficient.
Yeah, they are.
A
Right.
house built in 2025 is a heck of a lot more energy efficient than a house built in 1930.
Yeah, they're
So,
airtight. Yeah.
They're airtight. So, yeah, they're more expensive. They are. Building costs have increased. They are
Mhm.
more expensive. But again, you've got all new. Everything's new. And it's
Mhm.
tough to compete with new.
Mhm.
It is tough to compete. Once you've looked at a new one, comparing to something else,
Yeah.
it is really much more difficult to walk into an existing home. Now, many times these new builds, the neighborhoods aren't fully developed. So you're dealing with construction traffic, you're dealing with dirt and, junk rolling around, all that stuff
Yeah.
you're dealing with. If you're in that neighborhood, they don't have as much character in a new neighborhood. They don't have mature trees. They
Yeah,
don't have
right.
trees
Yeah.
that have been growing for 20 years.
Mhm.
They've got trees that they just planted.
Yeah.
In
Correct.
20 years, it'll look great.
Sure.
But today, they're not going to be in that same position.
Yeah.
So ultimately, if you're in the market to buy a home this year, you need to think about some of these creative financing types.
Mm-hmm.
Don't discount new builds. Don't say, well, maybe I can meet with a builder and I can customize and have exactly what I want. Keep all options on the table.
Yeah.
And that's what we're trying to get out here. As many times as agents, we don't think about, oh, I can have one built.
Yeah.
But what's the existing inventory look like?
And meet with a local lender.
Meet with a local lender,
Yeah.
get their numbers, and with the builder, it could be they've got incentives that work for you, and that may be the best option.
Yeah.
Ultimately, look at it financially. What's the best option for me and my family?
Yep. Really interesting show. All right. If you'd like to continue this conversation with Mark, make sure you reach out. Your contact info.
Sure. The website, skabowskiteam.com. Phone numbers 574-527-0660.
Okay. You've been listening to Real Estate in Real Time. Have yourself a wonderful weekend.